This is our Forex blog for April 19th, 2011. And like most days, we really want to see what the longer term trends are, and if today's trend matches that, you want to buy the strongest pairs versus the weakest. The dollar has a downtrend, daily, weekly, monthly is down. The yen has been having a counter trend trade move up. The daily, weekly trends up, the monthly still strongly down. The euro was moving against its longer term uptrend yesterday, and today it's resuming the longer term uptrend, although it's pulled back strong enough in the last few days that its weekly trend's still down. The pound has the strongest daily trend today in the CAD, and the CAD also has a weekly and monthly trend that's up. So it's the only currency that has all the trends up. The dollar is weaker than the yen, so we're looking at selling the dollar CAD today. When it starts to go weak right here at 3, and the CAD at 230 is extremely strong, you want to look to start looking for sales at 230 in the dollar CAD. So one of our rules is above the hourly moving average we focus on buys, below the hourly moving average we focus on sells. Here's 230. Price had a false breakout above the high, hit the 20-day moving average, which is a resistance area. There's likely to be selling, and once it breaks down, the IntelliTrend bars go short. You know, you're in this trade around here at 96.59, or if you want to wait for the hourly to get broken in there around 54, and you can see it fell about 20 pips. One of our two new tools that we've released this week, and they work in harmony with each other, is the FX tipping point and the FX momentum. And I'm going to remove the trend intensity from this. What these tools do is they give you a real feel for what's going on bar by bar. If you're short and you see the tipping point with a very high number over the dotted white line, it means a very high percentage of, in this case, dollar pairs are going down. They're lower than the previous bar's low. CAD pairs are getting stronger, and the momentum compares the current volatility on all these currencies. We compare the dollar to every other major currency, about 7 of them. We compare the CAD to 7 other currencies as well. And if the dollar's exploding down with more momentum than it has over the last 20 days on average, and the CAD is getting stronger, that's what the FX momentum will tell you. So this one tells you that the majority of dollar pairs are falling, CAD pairs are going up, and this tells you by how much. And so when you're short here and it starts to go down, very decent percentages participation. It starts off with a lot of momentum, and the momentum slows down, and guess what? The down move kind of stalls out, so you get out with a small profit on that trade. On the way up here, notice not a decent high percentage of them are going up, then that slows down. You're looking to sell the pullback right here, you get short. Very high percentage of them are going down. They're going down with a lot of intensity, and on many of these bars, they're making lower lows, and there's no strength whatsoever on up bars. But guess what? As it goes down, other than these 2 bars volatility, there's just not a whole lot of weakness coming back in, and you get out of that trade with a small profit. Now you could have shorted here again too. Notice this drop here. Not a whole lot of dollar pairs getting weaker and CAD pairs getting stronger. Okay momentum. On this bar right here, there's a lot of weakness, so you would hope the next bar or two would drop, and when it doesn't, you get out of that trade. And then on the way up here, notice there's a little bit of strength. You want to wait for that to kind of end, because you don't know what the future's going to hold. It could explode up, and then it comes down to the next bar. There's no strength or weakness. The net effect of that bar is down, and when it breaks the low here, you go short. And guess what? The very high percentage of dollar pairs are falling, CAD pairs are getting stronger. Decent intensity, tremendous intensity, and now you finally caught the explosive ripper. The currency meter showed you the dollar was the strongest. The weakest. The CAD was the strongest. You had to take a couple trades in this before you really got your home run. But when you have this kind of momentum, basically all the dollar pairs are falling like a rock, as you can see down here, and that's what this tool does. You can also use our tick charts for even more precise timing. Let's say you want to get short on a counter trend move up. Well, it rallies up here, goes sideways. You go short right there. You have the tiniest of tiny stops. If you're one of our traders that has bought the software or leases it through one of our ECN brokers, you might have a 4 pip stop right here. And so when you're wrong, you lose 4 pips. You can lose 4 pips 3-4 times in a row, and on one nice trade, get that all back. And that's the beautiful part about using our tools in harmony. Finding the strongest, buying the strongest currencies versus the weakest, especially when all the time frames line up, daily, weekly trend, monthly trend, real-time trend. And then now knowing on a bar-by-bar basis whether the trade's likely to work or not. Let's look at the euro dollar today. Very strong. The dollar was weak. The pound probably slightly higher probability trade because the weekly trend isn't quite as weak as the euro. So this one had a little bit of strength here, and then again at 5. Let's look at buying the pound dollar after 5. Here's 5 o'clock. This one is right bumping up against a major fib level. I draw the fibs every night so you don't have to. Saves you 40 minutes of work per day for the main 12 pairs. And let's put the new FX tipping point and Momentum Pro on here. And these are designed for really active traders that want to be able to have the tiniest losses, and when they're up 5 or 10 pips and it doesn't look like it's going to continue, they want to exit those trades with small wins versus having losses. Now this one's just kind of chopping around. Usually any resistance area that gets hit twice, the third time it gets hit, typically it goes through there. Anybody who wanted to sell here sold. The second time they sold double top. And when it didn't go lower than the previous low the second time and started to go back up right here, it's a pretty high probability place to get in. You can see right on this bar a very high percentage of pound pairs are going up and dollar pairs are going down. And even on the bar or two before, we had one bar that just really exploded. A couple currencies, pound pairs really shot up here. Not all of them went up. Very low participation, but with a lot of intensity. And then a couple bars later, you see this, and it takes off, and you have very high participation. Now initially, there's not a whole lot of volatility. Pound pairs are going up, dollar pairs are going down, but they're not going up excessively so. So you would move your stop underneath the low here and bring it back up near break even. And you can see it starts going up again. Very high participation, very decent momentum now, and the market's going up. Notice our IntelliTrend bars stay green. Tighten your stop here. You're in this trade maybe around 58. You've already locked in 14 pips of profit, and this bar right here, there's quite a few pound pairs falling and dollar pairs getting stronger, but by almost no intensity whatsoever. So you tighten your stop there just in case when you see that, and then it goes up again. Now usually markets will go 2 waves, and you draw your fibs off the first wave up, kind of consolidated there. Usually the first or second fib target's where it's going to stall. You have the 10-day moving average and our upper statistical likely high. Notice as this is going up, very high participation, very decent momentum on this bar, and as it goes up, we have very decent participation and intensity on this bar, but it's above the 1.618 level, and usually that's where the market kind of stalls. So at 5, somewhere between 5 and 6 on here, you're going to be looking at your tick chart to most precisely get out of that trade. Here's a tick chart on there, and you can use it to tighten your stop. Every time it goes higher high and pulls back a little bit, you tighten your stop. Higher high, pulls back. If the momentum is favoring your trade, in other words, if all the pound pairs are going up, dollar pairs are going down, and they're doing so with intensity, then these super tight stops, believe it or not, are not likely to get stopped out. If it goes up without that many pound pairs going up and that many dollar pairs going down, or without greater momentum than we've had on average in the past 20 days for this bar of the day, then tightening your stop like this most likely will get you stopped out. So it makes a higher high and pulls back, and we know that this 1.618 area is right here. So when it comes up to the monthly R1 and stalls, it's above our upper containment band. You're out of your trade here around 13. So that's just an amazing trade. In this trade, around 58 and out around, let's just say, 05. So you made 45 pips on that trade. Currency meter spots them. You buy either pullbacks in strong trends or sideways, preferably 30 minutes to an hour sideways moves when it breaks out, and you're in the trade.